if we look at where the capital is coming from to actually fund the energy transition towards renewable, towards net zero, we have to look at it from different angles. First of all, there are the state mechanisms, the support mechanisms so tax money, basically, who are partly funding the investment or topping up investments that would not be profitable, at least not at the introduction stage. So that's part of where investment money can come from. Other type of investors definitely have different risk profiles, and depending on the risk profile they have, they may come in earlier or later in the investment stage. Typically in a renewable project, you see early seed money coming in, and so developer money, which is more high risk because you don't have the permits yet, etc. So these parties obviously try to cash out at some point, and when a certain level of the risk has decreased. When permits have been received, at that moment you see more institutional investors coming in because they see more certainty into this income and return on investment coming in. So this is how Baringa looks at investment projects, and that's where also our market advisory services come in. At each of these stages of financing, we produce market reports and we produce price projection curves that help investors of different nature look at the economics of a project as it progresses towards becoming live. When we look at typical forms of players, we first of all have the big oil majors who want to enter the power industry, and they have to decarbonize, so they have to find another leg to actually build their strategy on, and definitely investing in renewable, solar, wind, etc. is part of the oil majors' strategies coming in. So they have to acquire the assets. They come in usually at a stage where the project has already a certain level of certainty. Another category of investors is pension funds. Pension funds are looking for certain money. They are gaming with pension money, so they are looking for, let's say, certain stable incomes. And therefore, they like projects who are still funded by either state money, also support schemes, or PPAs, fixed price PPAs, which gives them a certain level of certainty for a period of, let's say, like 15, 20 years. They're getting more anxious in the tail end of the project when they don't know whether the prices are still going to be profitable for them, the market prices. And that's where Baringa indeed can help to assess the risk at the tail end of a project. A last category of players, which is definitely using, let's say, a technology background and trader background skill, is the players that are looking for merchant operation. And what we see is that as projects going forward, even the more institutional ones, they will shift over time towards more merchant operation. And so those that already have the skill can already play the market prices today, but therefore you absolutely need the skill, the systems, etc. In-house. If you don't have the skill, then you better prepare for it, let's say, in a later stage. And that's also the kind of players that Baringa can assist with putting up a trading floor capability, a trader capability, and a back office and risk management capability.